Okay, so I'm going to go ahead and record this as well, share it with people after. But we'll go ahead and get started. We might have people coming in just kind of as we go. You guys should have the capability, I think, to go ahead and unmute yourself. Let me just double check. Yeah, you should be good. Joel, are you able to unmute yourself on your end? Let me see. All right.
Yeah. Can you hear me?
Okay, cool. All right, so yeah, if you guys have questions, feel free to ask them anytime. And then if you're not using the mic, if you could keep it on mute just so we don't keep out the background noise. But we'll just go ahead and get started. So my name is Jeremy Cloder. I'm the real estate broker of Outfast Realty and Investments and Outfast Property Management. Jared is on the call here as well, calling in, and he's my co-host, runs a short-term rental management company, and one of the best in the area, or the best, I should say. We always refer business back and forth with each other. I've been a TBREA host for, I don't know, probably 3 years now. I used to do the Brandon one, but I'm currently just running the South Tampa with Jared. If you haven't been to a TBREA meeting before, I think for you guys to be on here, you have to be members already. But if you guys are not a member and you want to learn about membership, just put something in the chat and I'll get with you after as far as what that looks like. Also, TBREA has a brand new website. So you guys might find helpful information on there if you want to check out tbrea.com. and what that looks like. So we wanted to talk a little. Jared, do you want to do an intro for yourself before we roll into it? All right, Jared might come back with us, I guess. So I don't think there's any sponsors in the room. We would typically, if we were in live or even as virtual as we are here, we'd allow some of the sponsors to go through and kind of talk about themselves, basically an elevator pitch. But if you guys are looking for some of the same companies that we use on a daily basis, with real estate investing, where they're wholesaling, and you're looking for a title company, you're looking for a real estate attorney, anything like that, we mostly use a lot of the sponsors on the website. So if you go to tbrea.com, tbreia.com, there should be a sponsors page and it should have all the sponsors on there. So that'll be a good list for you guys to look through. Home inspection, structural engineering, all sorts of things on there, insurance companies, stuff like that. Anybody that we use on a daily basis is on there. And if you guys are looking for a subcontractor or just another contact, you can always reach out to us. So I'll actually put my information in the chat box for everyone. If you want to go ahead and send me an email or something, I'll go ahead and put it in here as well. And then if we need to connect offline, I can always give you a call as well. Okay, and you feel free to add me on Facebook or LinkedIn or whatever as well. So I just put all my contact info in the chat box. I'll just throw my cell on here as well, and we can touch base after. So Jared, if you're listening, and you want to pop your stuff in there, you can too as well. Whatever you feel like doing. But we wanted to go ahead and have you guys go through a little bit of a sales and negotiation training tonight. We're very much like an open Q&A forum. So it's not. I don't have slides prepared. I'm not going to do death by PowerPoint or anything, but I'll take you guys through some stuff. But if you guys have any questions, we'd be happy to filter those as we go. I would like to kind of get an idea from you guys if you are looking to wholesale, if you're a fix and flipper, if you're just a business owner and you have a different type of business. If you want to put something in the chat function, or if you're looking to buy properties, basically what I'm trying to gauge is understand what kind of tips I might give. So if you're wholesaling, then there's things I would talk about with that. If you maybe have another business and you're kind of looking at real estate as a possible option, or you're a real estate agent, like there's different things I might talk to depending on what you're looking to do, and it would give us some context as we kind of move forward. So I think we have until 9 o'clock, but we'll probably go for maybe, 30 minutes to an hour and fill some Q&A, and then we can talk about other stuff as well. It doesn't have to be just sales and negotiation at the end. If you guys have other questions and people want to stick around, we can go ahead and do that as well. So Jared, are you with us?
Yeah, I'm here, brother.
Okay, cool. Did you want to do an intro for yourself real quick?
Yeah, you did a really good job. Yeah, obviously, my name is Jared Higginbotham. I'm the CEO and co-founder of Teal Hosting. We're a short-term rental management company, so we focus heavily on the nightly stays, not, year-long leases. We are based here in Tampa, and we've been in operation for about 3.5 years. And, if you're thinking about short-term rentals, definitely hit me up. I know my information is not in that box. I'm dialed in through a phone, but I think Jay Ryan, he's my co-founder. He's also on this meeting and in this call. So he can put his information in there, and you guys can connect with us that way. Short-term rentals, they're pretty baller. They're really nice here in Tampa. It's a nice place to invest in some short-term rentals. We did have a pandemic that just hit us, but it's a really good place to invest. It's different, obviously you want to diversify your investments here, but this is definitely a sweet opportunity here. But if you got any questions, for short-term rentals, what can I make, that kind of stuff, definitely hit us up. That's kind of where my expertise lies. I have fixed and flipped a few of my own properties, so my expertise is not solely in short-term rentals or property management for that matter. But if you got any questions and you think I might be able to help, please feel free to hit me up.
Cool. So yeah, I popped in your email. Do you know what name Jay Ryan's under in the meeting here?
I guess it should be Jay Ryan, but I'm not exactly
might
sure.
Be under a different account, or he might not be on yet. All right, cool. So I appreciate that. And we're both located in close to Ybor. Jared lives in Seminole Heights, I guess, but we both mostly cover properties in Hillsborough and Pinellas, I think is for the most part, kind of what we're doing. So thanks. All right, I wanted to start off by kind of just going over some of the stuff that we do. And I know it looks like most of the people are looking to buy a flip or a rental. So some of this may not be super specific to that. I want to just talk about some of the business stuff that we do, and maybe you can kind of pick and choose what might be helpful as far as how we're funneling clients. If you guys do at some point do direct mail and you guys are looking at different things, getting contacted to go look at properties, or you're working with the agents and you're making offers and that sort of thing, we can kind of talk to some of that as well. But I think to talk more about the sales part, it's really understanding what you do what you're looking to do and really having a passion for it. So if someone comes to me and is looking for property management stuff, if I don't believe in what I'm selling, then they're going to be able to tell right off the bat. So if you've ever met somebody that is trying to pitch something at you and you can just tell the way that they go about it just doesn't seem genuine, or that they're experienced about it, I don't think someone's going to take the time to learn about something if they're not passionate about it, and be able to answer the right questions that you have, and be able to communicate correctly the value that they bring to the table. So I think a lot of it is understanding how you're adding value. So if you're an investor and you're looking to partner with someone that has the capital, then you're looking at, okay, how do I add value from, maybe the operations side? So maybe you have project management experience if it's a flip, or if it's a rental property, maybe you have some property management experience. Or if you have your real estate license, then you're looking at, okay, how does that add value to the scenario that I'm in? So as an example, I think it's important to be educating people online. So your online presence is going to be really important, whether it's Facebook, LinkedIn, whatever you're using. But the first rental property I ever got into was from basically just building a good network, finding someone that had the capital, and knowing that, okay, if I don't have the money, where can I add the value? And it came from learning a little bit of the management side, and then also finding a good deal. So I found the deal, I negotiated it, we put it under contract, and assigned it into a land trust that me and another partner owned. But I didn't have to bring any money to the table. So he paid cash for it. We kept it a little bit less than a year, and we're still able to flip it for a profit and make some money in between. But it just comes down to building a good reputation and taking the time to educate yourself as well. So it's okay to say that you don't know something, and reach out to people for advice or how to kind of structure something. So you want to always be genuine in what you're doing as well. And as you're kind of building your reputation, the investing circle is actually quite small within the area. So if you burn a bridge, it's not going to be a secret to everyone with what's going on. And TBREA actually has an ethics committee. And if you guys have an issue with another TBREA member, It's something that you can bring up because we want to hold people accountable and make sure people are doing the right thing. So that's why TBREIA is kind of a safe space, if you will, for the real estate investing community to make sure you guys are getting pointed in the right direction. And if you need help and you find a deal specifically that you're looking at, or you want to understand how you can better leverage your skill set to take advantage of the strategy that you're looking to do, that's something that we can always discuss offline as well. So if you're a wholesaler, how can you make that work to partner with other people? If you're a private lender, how can you find the right people to partner with, and take advantage of opportunities? A lot of that starts with educating yourself and knowing what you bring to the table, what skills you lack, and what you're good at, so you can kind of put the pieces together. That's why, sorry, I'm just tapping my computer, so it's shaking. That's why Jared and I work really well together. We just do the 12-month leases, tenants, property management. They do the short-term rentals. So when I'm talking with owners, I'm able to come from a point of view of educating them on a market that I'm not an expert in, but I know enough to be dangerous. And so if I come across an opportunity of an apartment complex, and I have a couple of investors that we've met through, credibility of standing in front of you guys, in front of the room, hosting meetings and things like that, you start to build a reputation. So opportunities will come from that. And I can open the door and say, hey, not only could we do long-term management, but we could do some short-term stuff as well. This is what it may look like. And it helps build, okay, well, this guy's educated not just in what he does, but he kind of speak to this other thing. And you're kind of building this circle and referring business within this little ecosystem, because you want to be looked at as a person that has the resources and capabilities to get stuff done. And that usually involves, strategic alliances as well. Got anything you want to add, Jared? I don't want to hog the mic.
No, that's perfect, brother.
keep rolling with it.
Yeah. Yeah, no, it's really good. No, we do refer business back and forth to each other. And sometimes even my short-term rental clients, they might reach out to Jeremy, if we're thinking about shifting them to a long-term rental type strategy. It always just depends on the property. Not every property is a good long-term rental. Not every property is a good short-term rental. So it really just depends on, the client. And if you are in property management like Jeremy is, and you refer someone to a short-term rental, management company like us, it shows more than just your want for their money, right? It shows that you have their best interests at mind, and people really respect that. And I've had it happen before where we've referred people to other people that we really like doing business with, and the relationship didn't end because I lost that deal, but they actually referred us to other clients. So definitely build your referral network and bring something to the table, just like in this scenario.
Yeah, and one thing we mentioned already a little bit is your online presence. So whether you guys are just a one-off investor and you're kind of just looking for properties, or you're trying to connect with other maybe agents or brokers and get some properties off market, or if you're trying to work with wholesalers, you want to be mindful that a lot of people are going to look at you online before they choose to do business with you, or kind of during that research phase. So as business owners, we know that, hey, before someone even calls our phone, or let's say you send out a direct mail piece to someone, they're going to look at you online before they even call you. So they're already going to start judging you by, okay, what does their Facebook look like? What does the LinkedIn look like? What does the website look like? And what are the Google reviews, Facebook reviews, Zillow reviews if you're an agent, or some of the realtor.com, stuff like that. So you always want to make sure that you're mindful that people are looking before they even call you. So there's a lot of people that are going to hit your social media pages, hit your websites, that never even reach out because maybe they found a better option. Maybe they got put off by something that you said. So you want to make sure your branding is consistent as well, on your kind of niche in the market and what you feel like, your space is. So obviously I have the flag in the background. So Jared and I are both veterans. So that's something that can help. So if you're meeting with a seller or you're meeting with someone else, maybe that's a point that you can connect on. And if you're looking to buy properties, if you're a flipper, then it's showing people that you're serious about doing deals. So if you're talking with a wholesaler and they send you a crappy deal because the numbers just don't make sense, instead of just blowing them off, help educate the wholesaler, help educate the broker, the agent that you're working with. Hey, this is what I'm looking for. I appreciate you sending me this deal. This is why it doesn't work. This is what I would need for it to work. And instead of just, they're going to start feeling like you're kind of wasting their time if you're putting in a bunch of offers on something. But if you can help educate them, then it's going to help them be a better referral partner and bring you deals and bring you things that you're looking for. So I think the online presence is really important. You don't have to go crazy, with your business cards and all this other stuff before you even take the jump. But I think it's important to know what you're putting out there. People are looking at. So personally, I run everything through my personal Facebook page, all my business stuff. So I just am mindful that I don't post anything stupid. Rob just joined in, so I'll let Rob, since he was one of our sponsors, he just came in a little late. But I'll let Rob
Sorry about that, guys.
grab a little floor time.
Hey, man, thank you.
But yeah, just hit your thing real quick, Rob.
All right, I'm Rob, the branch manager for Guild Mortgage. I help people buy and refinance homes here in Tampa. I've been doing it about 15 years, so it's a crazy market right now. A lot of lenders are changing guidelines daily, weekly, monthly. So if you have any mortgage-related questions or refinancing questions, I can help you out. Thanks, Jeremy.
Cool. Thanks, Rob. Yeah, I think Raven put in the chat a little bit ago that they're looking for rentals maybe, so it'd be good to connect. I don't know if you join late, if you're able to view the chat box, but I'm just going to throw my contact info down there again. You guys can always connect with us online. If anyone wants to share their information, maybe deals they're looking for or anything, you could put it in the chat box as well for that. So actually, one of the things that's been great for us lately has been Facebook groups. So if there's a couple Facebook groups that are in the area for real estate investing, looking for deals, networking and stuff like that. So if you guys want to be connected in some of those, you can shoot me a message offline and I can make sure I send you an invite for some of that stuff as well. If you're looking to buy deals, having proof of funds is going to go a long way. Being approved for financing on the front end is really going to help you if that's what you need. Having hard money up in line already. So if you guys find a deal and you're able to act on it quickly, that's going to kind of tie into reputation within the marketplace and being able to get stuff done. If you're looking to buy deals, if someone brings you a deal and you're able to act quickly on it, and let's say they're new to the game, you only need a handful of buyers. So if you're one of the best buyers that this person has, they're going to bring a lot of the off-market opportunities to you. Everybody that has a buyer's list, all the emails, they have a pre-buyer's list to that. So if you're not on that list, that's what you need to get on. And that's the one where if I'm pulling up to the property and I'm about to negotiate on it, I'm already texting a couple people, hey, I got this address, or I have a property close to this one. This is kind of what I'm thinking. These are the numbers. And so there might be 3 people that I'm talking with before we would ever send out a wholesale deal that are like the real buyers that can jump on a deal. They can let you know within a couple hours if they want it or not, and that sort of thing. So that goes into you being able to negotiate a better deal too, because some of those buyers may not pay as much as the buyers on the email list, but I know they're going to close. So it's just something to consider as you guys are looking for stuff as well. One of the things that I want to talk about was if you're meeting with sellers, as an example, and you're trying to negotiate a good deal, you want to anticipate the questions that they're going to be asking, and you want to make sure you set the right expectations, communicate value to them, and how you're going to help them out of their situation. So if someone comes to me and they're looking for management, I'm going to put them kind of through my script, right? I'm going to use the CRM. Best CRM is the one that you use. So if that's an Excel document and you're tracking leads there, that you would just want to make sure that you use it. And that's the most important thing. So, but when you're setting the right expectations, you're also kind of understanding what that client needs and what kind of person they are. So there's people that I'll talk to on the phone before that have inquired about our management, but there's red flags that are coming up, right? So one of the best things I've learned the last couple of years is always trust your gut feeling. So if you're dealing with people, either potential clients that you're going to work with, or referral partners, or someone that you're trying to build a relationship with, if you just feel like something's off, just trust that. So if you guys are working with, a real estate agent and you feel like they're doing something a little sketchy, you can always be put in hot water if you're running in a circle with someone like that, or you're doing a transaction with them, or trying to structure a deal. They could do something shady. So you want to make sure that you're surrounding yourself with the right people. Jared, you got anything you want to add?
Yeah, those people that you surround yourself with, they're going to be not just good partners that send you leads, but they'll also be folks that can vet your business. So if you have a particular business model that, maybe it's like mine, where it's not something that a lot of people know about or do business with or work in that kind of that industry or sector, you can refer your potential clients to maybe some of the partners that you pass leads back and forth with to kind of co-sign for you and give you that good referral, somebody that they can talk to that isn't related to your business that can testify to, your character, your quality of work and things like that. So that's what I would add.
Does anybody have any questions so far about anything in general? I mean, I was kind of pre-planning for this, and I realized I kind of was coming at it from more of a business owner standpoint on leads coming in from a business as opposed to sales and negotiations as a wholesaler or a fix and flipper or someone buying rentals. So I want to make sure you guys are getting value, or we're kind of hitting the right questions. If you guys have anything, if you're dealing with, hey, what if I go to an appointment and they ask this, what do I do? Or what if they ask for proof of funds? Like, is it really necessary? So if you guys can give me some feedback in the chat, or if you want to just unmute yourself and kind of give me some context to some of the questions you guys might have, it would help us kind of structure the rest of the meeting and things we might talk about.
Yeah, so I actually have one question I've been having problems with. Can you guys hear me or no?
Yep, you're all good.
Okay, perfect. So one thing I've been having trouble with is kind of just getting more deals coming in, because a lot of the leads that I've been getting from a lot of agents, they don't work. I know you said to like tell them why they don't work and things like that.
Yep.
But what do you recommend me to do so I can increase those deals coming in?
Are you do you have a real estate license, or are you looking to wholesale, or are you looking to flip? What are you?
No, I'm trying to get into rental, some multifamily.
Okay, cool. So you have some capital and you're looking to put it to work. Do you have partners that you're working with?
Yeah, I have one.
Finance it or whatever.
Yeah.
Okay, gotcha. So I would say as far as deal flow, connecting with other wholesalers, some of the Facebook groups are going to be really key as far as at least getting leads. So you're going to have to probably look at 100 or 200 before you actually get anything done. One service that's really worth the cost, it's a couple grand. I think you have to pay up front for the year. They are sponsors of TBRIA, called Click Invest. They basically scrape the MLS to the criteria that you want, and they can put out 100, 200 offers in a day for you. They'll send you properties that kind of meet what you're looking for. You can play with the comps, the ARVs, the repairs, and you can fire out offers. What's cool is Click Invest is actually a real estate brokerage. So when they're making those offers, you have already an agent under Click Invest that's negotiating on your behalf. So even though I own a brokerage, we use them because our profits and our stuff's going to be made on the flip. I don't care about the 2 or 3%. So I think in the last 12 months, we probably, it's been a little bit slow, but I would say at least 3 deals that we've been able to buy through Click Invest, right? So $3,000 a year is totally worth buying 3 deals. So most of the time it's going to put people off because it's expensive, but it's really, I mean, guys, it's really some next level stuff. So I'd at least do a demo of it. So that's going to help with your deal flow. If you have, so for buying rentals, I think it's important to, make sure you have the financing set up, or get with someone like Rob. If you're going to be using a pre-approval, that's going to go a long way on the front end, making sure that the deals aren't falling out, that you guys are making offers on, or structuring hard money, 6-month hard money loan, or 12-month, and then refinancing out, doing the BRRRR strategy as well. So I think that's going to help. Personally, I don't think, if you're looking for rentals, I wouldn't really spend time trying to do direct mail, as a wholesaler looking for leads and spending the money. Just network with people that have the deals that are spending the money on marketing. So, if you have 50 to 100K or more, you definitely should not be trying to wholesale. It's not worth your time. It's a job, it's a grind. So connecting with other people, it could be a good thing. Honestly, networking with property managers for you, Lemuel, hope I pronounced that right.
That's good. Lemuel.
Property managers would be a great source. So even if you're not using them for management and you want to self-manage, we have we have owners that want to sell. I have a 3-unit that we're probably going to relist on the market that we took off about 4 months ago. The owner just told me today that they want to put it back on the market. So even though we may lose on the management, because you want to self-manage, we're going to make our 3%, whatever, on the listing side, and who, could care less. Everyone's going to get their slice of the pie. Same thing for Jared. Jared probably has a couple short-term rental owners that are thinking about selling, or he knows a good property where people are looking at it from a flip or long-term rental, and maybe long-term's like just okay, so it's sitting around there, but maybe a short-term rental, the numbers would rip. So I think if I was an investor looking for more rental properties, it would be, monthly contact with referral partners. So maybe agents, brokers, property managers, other investors, even your fix and flip investors that are buying in areas that you like. They might have too many rehabs, and they got one too many properties, and they just need to liquidate one because they don't have enough ways to renovate the other ones. And they may have a deal that they want to sell. So you're just going to have to go through kind of a numbers thing, and Bigger Pockets too. If you guys aren't on Bigger Pockets, it's a really good place, education. The forums on there are crazy. It's a golden nugget for referrals, man. Like for management and stuff on there, you guys wouldn't believe the amount of the amount of leads I get by posting on the forums there. And I'm not even pitching anything. I'm just responding to questions. And I get tons of leads. Mixture of buyers, people that have properties, wholesalers. It's just crazy. So Bigger Pockets forums is a good thing just to interact on. Respond to the different questions and stuff being asked on there. It's going to get you some deal flow as well. And you can set up your profile to kind of tell what you do as well. So I think that's a good thing to kind of take a look at. Hopefully that answers some of your stuff. You have any follow-up questions?
Thank you.
Yeah, no problem.
Hey, Jeremy, I came in late. What's the main topic of the meeting?
We're kind of like, it's supposed to be sales and negotiations. But it's kind of, I like the Q&A format, so you might go down different directions. But I had kind of prepared a lot more towards what I was thinking as, people coming in and operating a business kind of stuff that I do. And I realized I should have done maybe a little bit different, but because I wasn't sure the context of who's joining, because sometimes you get wholesalers, you get other types of people. So just trying to talk in general terms, but that's what the topic was for. Yeah,
I mean, where are you seeing a lot of activity just in everything right now? I don't know, on the realtor side or management side or investor side, has fix and flips slowed down at all, or there's still a lot of deals out there?
We've been closing pretty consistently on the retail side. So if you guys have properties that you're looking to liquidate or you're looking to buy, you need to be taking a look at the market for sure, because as things are starting to open up, there's a lot of buyers and sellers on the sidelines, and the market's going to be ripping for a good bit. And I think overall the just trend of the real estate market over the next couple of years is still really good, especially for locally in the area. So sometimes I'll have people that are looking for deals, and they kind of feel like they're overpaying. But I just think with the growth and stuff, it's kind of hard to buy wrong in a certain instance. But yeah, rentals have been fast moving vacancies, no slowdowns on those. So it's just been overall a really active market, and it's getting more and more busy. So it's you just got to be on top of your game if you guys are looking for properties, be able to jump on something and evaluate it quickly.
Sorry. Have you seen many property owners or investors like defaulting on or late on their mortgage because they haven't received rents coming out of this?
I haven't seen it. I haven't had anybody tell me that. In our management agreement, they're supposed to, but I haven't seen any of that as far as that. Delinquencies, they're there, but they get lower and lower as the month goes on, and most people get caught up before the next month. So it hasn't been anything too crazy. Nagy had a quick question here. How do you see the COVID-19 affect the market in a few months from now, end of year? I don't think the virus is really going to be making a hard impact long-term, really, or at least from what we've seen now. People are going back to work, but the only concerns I guess I have are more so what kind of smoke screen there is before the election. That's kind of my thing, is what's the election going to look like, and what's going to happen after that. We could go into a recession after that. There's a lot of, balloons start popping after the election if they're, the way the media just kind of pushes things around. So that's more so maybe one of my concerns. But I think as far as rentals and stuff, income from tenants and things like that, and people looking to buy and let and sell. Like people are still moving. One of our, our area is one of the top in the U.S. for rental market. So you got lots of investors coming from other states trying to buy stuff here to get in on the rental market. You just have a lot of job growth. So, I mean, I think we're maybe a little more insulated than some places with everything that we have going on. And I right now, I don't see it making too large of an impact. Some of the things that are being affected, though, is your financing. Hard money or traditional lenders are, maybe more strict or maybe going to take a while to open up. And Rob can always chime in too, but we had, I don't know, 7 loans that we're going to close on our hard money fund that we have. And a lot of those were 30-year product and basically it vanished in 24 hours overnight. And so we just lost out on a ton of income from closings that we were going to have, that we were going to fund. That was secondary market institutional money. So those guys will start opening back up. But Rob, if you want to give us, a 60-second update on the lending market and kind of what you're seeing as far as credits, maybe different requirements from lenders, or it's almost business as usual, probably be helpful.
Yeah, there was like a really quick movement to tighten, I feel like, with some lenders, more specifically the bigger banks that are the more conservative banks. Like, for example, Chase decided to only do purchase loans with 700 scores and above and 20% down. And that just blew my mind, because Fannie Mae allows for 3 to 5% down and goes down to a 620 credit score. So I've gotten a lot of business from other bankers, other mortgage guys, or realtors that said they had a deal fall out and I could do the loan versus, someone got declined because of credit score at a different bank. Okay, so it's starting to come back. However, it's still not back yet. I still think the lenders want to see how the forbearances play out over the next 3 to 4 months and how many actual defaults there's going to be. Everyone.
Jared and I were actually talking about this at the office, that I think there was something like 30% of people applied for forbearance, but I think 30% of that are people that had actually paid. So I personally, I did apply on my personal residence, but I continue to pay. I was just, if this thing was going to last 12 months, then it's, it's better to have it and not need it. Also, also something that I recommend is asking around for lines of credit. So I just filed taxes and went to Bank of Tampa, who's kind of known for having a good line of credit unsecured. And there's nothing right now, but 60 days ago, I could have probably got an easy 50 to 100K, really easy. And with great rates, like 5-6% or something. So it's important to always keep looking for that stuff. And but right as the virus was hitting, I basically applied for increases on all my credit cards. And I got like 10 or 15 grand just off the bat. I have pretty good credit, like 740 or something. And so even though I don't use these credit cards, I wanted to get as much balance as I could, or opportunity, just in case, something goes crazy, or, it just gives you more ways to leverage if you're, if you're dealing with different things, or you need to finance a bunch of stuff on a rehab, whatever it is. It's better to have it and not need it than need it and not have it.
Yep.
Hey, Jeremy, can I jump in on that real quick?
Yeah.
Hey, so you mentioned, that stat that I heard of with the 30% of everyone who's in forbearance actually paid their rents on time. And then you had a question earlier that was specifically about, like, where do you find your deals? Well, that's like blood in the water right there. If folks aren't paying their rent on time, let's say you have a multifamily property and your tenants aren't paying their rent on time, maybe the best part, or the best idea that I could give someone would be to start looking for multifamily properties that are in areas where you do have a higher concentration of folks that aren't paying their rent on time. You'll probably run into investors who have held that property, who are maybe perhaps getting a little worried. Maybe you can pick up some of those deals on those multifamily properties, for a nice little discount if you're watching demographics, and you can get a hold of some of that information about who's been late on their rent. So to go back a step further, building those partnerships with those property management companies, and getting their insight. Obviously, you said you're doing pretty well. Your tenants are paying pretty well, but what about some of those property management companies that are heavily invested in, some more stagnant areas of Tampa specifically? Right off the top of my head, I'm thinking Temple Terrace, places like that where you've got sort of a new demographic is moving into that area. New Tampa's another one. You might be able to get some of those multifamily properties. And then also as another resource, there are lots of people in the TB area that are already invested in multifamily properties. It's never a bad time to take some of your capital and partner up with some folks on deals if that's an option.
Yeah. Yeah. And on the topic of evictions, as an example, it got extended to July 2nd. But you can actually have a VA, or you can get the list of evictions. So one of my marketing things would be to direct mail people that have filed for evictions. So you could just sort that possibly by the type of asset. If you're an agent or an agent, they can pull a list of multifamily units, under 10 units and over 10 units. And then you could basically scrape that against, it might be a little challenging, but you could have a VA basically scrape that against maybe who's filed for an eviction. And then you could find owners that have multifamily that have filed for evictions that, might be a good lead source. So that's something that we'll do for management is a lot of people don't know how to navigate the waters of the evictions, or they don't know what to do. And so that's why we've been getting kind of an increase in business as well. So that's another potential marketing strategy for you guys. But one thing I wanted to mention is, as far as if you're going to meet with the seller of our property, specifically, is kind of like a credibility kit. So I have this, we've had this on the wholesale side, or just as a business, it's, testimonials. What do you do? How are you helping people, and what sets you apart from the competition? So one thing is we would always do if we're going to appointments, or even if you're meeting with a broker, you can say, hey, look, this is what we do. This is our track record. This is how many people we've helped. This is how we've helped them. If you're looking to network with other people, it's like, look at, hey, in the past 12 months, these are all the deals we bought, or this is five of the rentals in my portfolio. This is what I'm looking to buy. So if you can give people some context and show you like you're really doing deals, or like, here's a couple of closing statements of stuff that I've done. So whether you're looking for new deals, you're looking for partners, or you're trying to buy properties direct from a seller, it's like, you really have, you got the proof of funds, or you get a fake one online. It's like, look, I got cash in the bank, or I might have other investors that I'm going to partner with. You'll be able to seal the deal a lot better. So depending on your situation, kind of what you're looking to do, you might build something like that as well. That's going to help you guys close deals and continue to build a good reputation for what you're trying to do. What other kind of questions we got?
I got a question for you, Jeremy.
Yeah.
So let's say for a new investor like me, how do you recommend approaching someone to make a deal, like someone who's doing a bird strategy? And how do you recommend one, approaching them, but also two, kind of pitching how I can bring value to them?
So you mean like help, like like finding a capital investor or a partner that has the funds, or you mean buying like a property from a seller directly?
No, I mean like finding a partner, but not even for the sake of they're the ones with the funds, more so that they're the ones with the experience.
Okay, so like,
Mentorship, right?
yeah. So there definitely has to be like something that's going both ways. So like so maybe you have the time, maybe someone has the experience. They have to be really, you might have to do some stuff for free too. You may have to pay them for like coaching, or say, hey, look, I want to get involved in the deal. I know you have the capital, you have the resources and the experience to do it on your own, but like, I want to get in on it. So maybe you bring some capital to the table. Maybe you're building your experience on project management, or you could add value in some other way. You just kind of have to look at like, okay, what's the situation? What do they have? What do I have that maybe they don't? And how can we make sure that it's a mutual thing, and we're not, one person's not sucking a bunch of time and effort from someone else. Like as an example, if someone asks Greg that they want to help kind of project manage or want some experience with some mentorship stuff, it's like, well, a lot of people want mentorship. Like maybe they don't want to pay for it. So like maybe you could do some project management, but then I'm kind of having to teach you how to project manage. So like even just asking and saying, I'm willing to work for free, that still may not be enough. you kind of have to just have a conversation with them and say, hey, this is my situation. This is what I'm looking to do. How do you feel like maybe I can fit into the scenario? Is there, what could I do to help to learn? And again, kind of understanding what your strengths and weaknesses are and how it might fit into the situation. So it kind of just depends on what the scenario might be. But if you're coming to the meetings consistently, like Mike Rodriguez is sitting on here, he joined a little bit back, but Mike's been coming to TB-RIA for a long time now. And, you come consistently to the meetings, you see the same faces. So a lot of it's just showing up with whether it's network meetings, TB-RIA, other ones, Facebook groups, like you start to see the similar names, and then you kind of get this credibility that you're serious. Because a lot of people come to these meetings like you guys are, and 50% of you will never see you again after this meeting, probably, right? So it's like showing up, being consistent, and people notice. There's a lot of people watching, especially if you're strategic about adding people on Facebook, LinkedIn, and stuff like that, which has always been kind of a strategic thing of mine. If I'm looking for a capital investor and I know so-and-so has money, I might add them on social media, but I'm not going to say anything. But just over time, I'm doing little things. I'm liking their comments. I'm sharing something that I know they're related to or they have an interest in. And I've built some really good relationships like that over time. That's opened up other opportunities. So there is a little bit of strategy behind it too. So you might have someone in mind who are like, man, I would love to partner with this, or they're kind of doing these types of things, but you kind of just slow play a strategy to get in front of them, or kind of understand what their needs may be before you kind of maybe pitch them on an opportunity as well. Any follow-up questions? Hey, Jared. Mike had a question. When is short-term expected to come back to previous revenue levels?
Oh man, don't get me started. I'm actually doing right now about 15% higher in revenue at this very moment than we were this same exact time last year, which is kind of a testament to everything that we did during the pandemic. I was able to drop our prices monthly for our rentals just for the initial first month and a half, 2 months by about 60%, and I watched everyone vacate the market. So now my prices are about 15 to 20% higher than they were pre-COVID-19 pandemic and last year. So short-term rental is really hot for me right now. I basically got rid of all my competition. So we lost a lot of demand, a lot of amateurs that are kind of in the market doing it themselves. They got disgusted with it. They let fear and paranoia drive them completely out of the market. And now it's wide open for the rev share model type people that are doing stuff like we are. So if you're interested, get into it right now.
Cool. Mike, you got anything?
I'm a client of Jared's, and he got a renter during the pandemic for us, and he did a great job. So
just like I said earlier, I think I mentioned third party validation. So
seriously.
And I don't know how much you paid Rob to say that, but that's a great thing. I know.
I'm just impressed. Yeah.
I've been getting, so like in these Facebook groups, people have been tagged me out the wazoo. Like someone will ask for a property manager and 5 different people will tag me in that thing. That's what you want. So if you have a good reputation, you're looking for certain stuff, like other investors will tag you like, oh, who buys sinkhole properties? Man, there's only one guy that ever comes to the TV meetings that buys freaking sinkholes. So like everyone knows that guy is that. So if you can kind of build a little bit of your niche or what you're looking for, there's a very good possibility other people will bring you into the conversation if they kind of know what you're looking for and you're consistent and you're showing up. Yeah, we had Mike says homeowners who were doing short term, some of them may have a long term tenant locked in. I think we had one client that we were managing together that put one of his units back long term, but then we had some that were kind of on the fence. And a lot of it's kind of educating and helping people understand what the reality of the market is, and what they may or may not want to do. Whether they're trying to switch their strategy. But there is opportunity with short term, even though it's been on the fence, is you got a lot of less supply and you got a lot of people out of the market that were hurting the short term rental market rate. And that's why some of the rates are higher. So definitely depends on kind of what you're looking for in your risk profile. And then I think also what the strategy is long term. And, you know, Rob, can you speak to real quick, are people able to utilize short-term rental income to qualify for mortgages, or do they need a trailing 12 months, or how do banks look at that?
Good question.
I know a workaround is you could always have kind of like a master lease in place of what you're getting.
It comes down to how long of a history you've been doing it for. And really the underwriters want to see that it's on your Schedule E of your tax return. So you're claiming the income and filing it just like you would a long-term rental. Okay.
You mean I got to report that money to the IRS?
Yes. Whatever you do not report, an underwriter cannot use. So you want to make sure you're reporting that on your personal tax returns to have that history. You need at least 1 year of history so the underwriter has something to go off of. Guild, my company, released a program through Fannie Mae where if you are renting a room or I believe a mother-in-law suite as part of your primary home, then if you have a 12-month history of doing that, we can utilize that as income. That's a new thing, but that's kind of a rare, I haven't seen any of them yet that have come through like that. So point is just put it on your tax return.
So Nagy asked a question, are the weekend investors back to the trade like the hedge funds? So one thing that I think is interesting is when I was talking earlier that a lot of the secondary market funding dried up. You know, a lot of these hedge funds, whether Amazon's buying or Open Door or Zillow and all this stuff, a lot of their funding went out the door with that. So it's not their own capital. So it's actually kind of a unique thing where if those big players are out of the market because their secondary institutional money hasn't come back yet, then that's good for the local investor because nobody else is buying cash or has the local community knowledge of the area and can build those relationships. You know, as the neighborhood investor that's, you know, looking to buy a property is much different than a big company coming in as well. So I think there's some opportunity there. Mike Rodriguez did ask, any issues so far removing squatters, filing ejectments due to COVID or any extra delays? Okay, so as far as management stuff, I'll just touch on real quick. We have one unlawful detainer that we filed about a month and a half ago, and and it's still kind of being floated out there. So part of it is right now you can evict for something other than non-payment of rent. So if someone's not paying rent, you're not going to be able to evict them or really get anything pushed through the process. But if they're violating the lease in some other way, you can still move forward with it. Now it just comes down to, are the courts open where you're doing that at? What's the timelines? Certainly most likely dragged out or backlogged. So it is taking more time to get the stuff done, but stuff is still getting filed. You know, we basically have the paperwork waiting for or actually I think the judge had signed off. I think we're waiting for the sheriff's office to get rid of possession or meet us at the property or whatever. So it's just different parties going to have delays depending on backlog and stuff. So it kind of depends, but we're pretty fortunate that we just have that one unlawful detainer, and it was more of like a kind of like a squatter thing going on. But we filed it, and we used Evictions Plus. So Evictions Plus is not an attorney firm, but I think they've done like 20 or 25,000 evictions or all this stuff from the 80s. Have been around forever. So sometimes we'll use them. And then if they have to hire an attorney, you got to pay extra for it. But and then the law firm I use is MGFD Law or whatever. I do evictions through them. My real estate attorney is different than who I use for evictions just due to cost. But yeah, it kind of depends. Yeah, and it would be good just to find out a law firm or two. You could probably get on their newsletter, real estate law firm, and if they have like a newsletter, they should be pushing out info as far as keeping you up to date on the rental markets as well.
Hey, one good thing about short-term rentals, if you don't pay, you don't stay.
Sorry, I was just reading one of the comments here. Ryan was talking about.
I can take that one, Jeremy.
Yeah. I was gonna say, I've never really had any, honestly, I've never, in all the listings and stuff I've ever done, I've never had I had never an appraisal come low on a purchase. I had it come on a refinance. But that's another reason why for this particular client, they bought kind of the odd property, a duplex with 4.2 on each side, which I've never seen before. And it's a lower income neighborhood. So even though the rents and the cap rates or whatever justified a high price, when the guy ran the sales comps or whatever, it was a total bomb. So sometimes they always say to never buy that kind of oddball property, the biggest property or something in the area where it doesn't fit, because you might run into issues. But yeah, Rob, if you want to hit that question, that'd be great, because I could use a refresher too.
Yeah. So Ryan, I'm not sure if you're a realtor or a buyer, but it appears you have a listing. You took a VA loan offer, and the VA appraisal came back low, like 40 grand low. And, it is a higher purchase price amount at like 750. I have seen appraisals lately. Some have been coming in lower. So that is common. I don't think the other appraiser cares at all that you had a pre-listing appraisal at 760. However, I believe that the VA, all appraisers, there's a kind of an appeal process, and it's a pretty standardized form, and you need to provide 3 additional comps that the appraiser did not use or did not see or were new closed loans. So you can provide that those 3 comps and dispute the value, and that's what I would recommend you do. If you email me the appraisal, I can take a look at it and see. But that's my advice: is definitely get the buyer to dispute that, because the buyer's agent agrees with you. It appears.
And I know one thing it does on VA, for example, does a crappy appraisal follow the property or the loan? I know people always ask that. Or is it both?
I always get VA and FHA mixed up, but I'm pretty sure it does stay with the property
for like 6 months or something.
Yeah.
Gotcha.
Mm-hmm.
Yeah. And what's the where does VA transition into like a more of a jumbo? Because I think VA is only like 400 something, right?
Well, that's what people think, but there really is no cap on a VA loan. There's just a formula percentage where the veteran has to put a little bit more down as the purchase price gets higher and higher.
Okay. So
it's
it's just no longer more like 100% financing.
Correct.
Yeah.
Yes. But it's maybe like 7% down. It's not like 20% down, but you can go over that county limit. The county limit's 5, 10, 400 right now.
Okay. Gotcha.
Okay.
Makes sense. Yeah. And you could always, the MLS obviously has all the comps there of what's been on the market. So one thing would be possibly, if you wanted to take the time to do it, is you could just pull public record comps depending on the county and how easy it is. You could find possibly comps that sold that weren't on the MLS that maybe the appraiser's not seeing. I don't know how their software works, but you might be able to find a property that just sold off market that matches and may help boost, but it's not showing on the MLS. I don't know if how they look at that stuff, but
I think appraisers are a little scared at the moment, and so they're not pushing the boundaries of the range on a listing. So they might not know how the economy is going to recover from this. They don't want to be the one that overvalued a property too high, and, so that could be another thing.
Yeah, because they always want to say it's a normal market with buyers and sellers like equally and nothing crazy going on. So I wouldn't be surprised if appraisers are kind of at least maybe chopping off a couple percent in anticipation. Like we had a client that was going to buy a property, and he had one vacancy, and the bank kind of just changed their vacancy ratio of what they wanted to see, and it was like way more than was reasonable for the one unit as far as the whole property income, but it basically started killing the deal because they were kind of switching up, how much. If one unit was vacant, they were just allocating a higher percentage of like vacancy to it than you normally would under normal circumstances. But yeah, you could always look at some of the pending comps too might close by the time you're kind of doing a dispute or something that might have additional ammo. But it's a good question. What else you guys got?
Also, what I usually see is you're at 710 appraisal, 750 list price, so there's a $40K difference. A lot of times I see the buyer and the seller split the difference. So
Yeah.
The bank lends at 710, and then the buyer brings an additional 20,000 to closing if they have it.
Or the buyer or the seller's gonna be like, yo, throw in some of your commission, help me out. Or lower
I
your
don't know,
commission.
Ryan.
So
Yeah.
the seller would be like, oh man, can you take 2% instead of 3%? Because maybe I can get the number down a little bit.
So
I've had to do that before, throw some money in. But yeah, what else? What other things are you guys struggling with? Any wholesalers in the room struggling with different things on appointments, or we want to make sure we can.
I've got a crap ton of calls lately on a property of mine from wholesalers.
Oh yeah.
Yeah,
You
and
should save the direct mail if you get any direct mail, so then you could share it or you could post it.
you guys want that stuff?
Oh, I think it's interesting just to see different people's messaging. But
Yeah.
I think Greg, whenever he tries to get something, he usually keep it, because when he would do his wholesale class, he would show just different examples. I've been getting a couple where there would be like the photo of my house with the little thing, and I'm here in Ybor.
These are calls to like my cell phone, like.
Oh, yeah.
So I don't know how they're getting a phone list, but
yes, they're just skip tracing it on something, and then maybe robo dialing.
And I own a couple, and it's only one that they're calling on, so investors must be wanting to buy in that area. So
are you delinquent, Rob?
No, hell no.
Or code enforcement issues?
I've owned that one the longest.
Oh yeah,
but it's over in like Port Tampa, like Gandy and Inner Bay.
That would be why. Because how long have you owned it?
I've owned it since 2007.
Dude, yeah. So the reason you're getting so much mail is possibly when you sold or when you bought. Most people are going to pull lists of like someone that's owned the property 5 years or 10 years or more, and then maybe they run a little formula like, okay, maybe they're going to have at least 50% equity or something like that too. So they're kind of scraping, but it's mostly a time-based thing. And then do you hold it in your personal name or an entity?
Personal name.
Yeah, so that's another thing. Sometimes people won't waste the time to go after ones in entities because sometimes it can be a more sophisticated investor. The decision maker, yeah. Yeah, or they have to go through and look on Sunbiz who owns the LLC and then skip trace, and it's just more work if they're doing it themselves. Like for me, honestly, a lot of times that I was doing direct mail for property management, it's like I wouldn't send it to any entities, even though possibly it's an investor with more properties. It's possible that I'm going to come across maybe a less educated or someone with just easier to convert, right? Sometimes investors are good to work for management because they have a lot of doors, but they want to micromanage and they want to nickel and dime me over every little thing. So sometimes the ideal client isn't necessarily someone with 50 doors. It's 50 owners with one property that just rents better than the low income stuff that the investor has. So yeah, it can definitely vary, but it's probably why you're getting the calls. All right, let's see here. Any other questions coming through?
I don't see any.
Someone's got to have something. Haven't heard from a lot of you.
Hey, Jared, did your properties run out of toilet paper? Did you have a toilet paper shortage during the pandemic?
I personally didn't. I use 2 squares every time I wipe, so I do my part for the environment. But
good for you.
No, man, we did pretty well. I mean, just like everybody kind of saw, they had food shortages in local grocery stores, right? Well, the food stores get their supply of meats and fresh fruits and vegetables and stuff from a completely different supply chain than the restaurants do. So it's very similar for us. So
cool.
If you're courting a short-term rental management company, make sure that they don't go ask that question. Like, where do you get your toilet paper? They tell you like Sam's Club or Walmart, you should probably run.
Good tip. Good tip. One thing that I will give you guys that should be one of your takeaways. It's a fairly simple thing. Is if you ever have trouble getting a response from a seller that you're working with, or an investor, or for us, a client that's inquired about something and has given us the cold shoulder. There's 2 phrases you can use. They both work just about equally as well. But one thing I'll do is if I'm, following up with the client consistently, and nobody, they're just gone dark. We had this great conversation. They wanted to sell to us, or the management just seemed to be spot on, and they agreed on it over the phone. And then, you follow up 3 days later and nothing's going on. Is I'll just send them a message. Usually I'll just send them a text and say, hey, hey Jeff, you know, have you given up on this? And 99% of the time, they're going to respond. Another one that Greg uses specifically is, hey, you know, we had a good conversation. Did I do something wrong? I apologize if I did something that offended you. And of course, they're going to respond right away, like, no, sorry, I've just been so busy. So we tell our agents that all the time. And if you try it and it doesn't work, I'll buy you a beer. But it works 99% of the time on any client. So if you're having trouble getting a response from, and it could be anybody, but you know, in our instance, it's usually they're looking to buy properties or something like that. It works really well to keep that kind of conversation going. And it's just a really good thing that we've implemented. If you guys are willing to pay for some training or get on a newsletter or a blog, John Martinez is a really good sales and negotiation guy for real estate. Trains a lot of wholesalers, companies that are scaling will use him and consult with him. He has some really good stuff. I think we have his training. It was like $1,000 or 2,000 or something, and a bunch of videos where you can watch, and it's super helpful. He'll talk you through the whole situation of talking with a seller, how to negotiate with them, how to help them understand and realize what you're doing, and that, you know, if you're using the MLS and you're pulling comps, and you can pull the cash comps, you could actually say, hey, you know, so-and-so, your property, from what I see, I just saw 3 other buyers buy properties, you know, within a half mile, and they all paid cash, and this is kind of what they were paying. So that's how, if you hear about these wholesale companies that are ripping offers over the phone without ever seeing it, and stuff like that, it's typically what they're doing is they're just pulling cash purchases in the area and making an educated offer, maybe like price per square foot or something like that.
Hey, real quick, a little bit cheaper option if you're not ready to spend $2,000 and purchase one of those packages. There's a great book. It's written by Chris Voss. He's a ex-FBI hostage negotiator. I know he's done a couple different podcasts that are freely available all over, but he wrote a book, and his company's called the Black Swan Group. Definitely read that book. I think it's like $10. Real quick, easy read. Definitely helps you get inside the mind of people that you negotiate with. So there's some really good tactics there. Simple things like mirroring, bringing up fairness, different things like that. I mean, I know this meeting was all about like negotiating and things like that, but I would build a foundation off of that book. I would start there, spend $10, $15, get that book, read it twice, make some notes, and then kind of think about how you interact with all of your clients and all of your business partners, and try and start with that. And then, you know, see how that goes for a little bit, but then also, you know, maybe spend that $2,000 and get that really, really good information. But don't sleep on that book, Chris Voss.
I think it's VOSS. Just going to roll through some of the questions here. I think, Mike, you had one. Do you think the value of the market or whatever is in the wintertime is going to be a little bit slower? I think it's going to be, I don't think it's going to be much different. I think that a lot of the people that are trying to move right now, everything's just going to get pushed back a little bit. So I think the pent up demand for both buyers and sellers is just going to continue, and it's probably going to push the market a little bit further into winter than we would normally see. It's kind of what I'm kind of expecting to see. Joel asked, do hard money lenders typically require that you have a legal entity set up? I think most do. It's pretty easy. I think most people that are looking for funding will put it in an LLC. You can always put a property under contract in your name and then just have it so you can assign the contract and then create an entity. And then, you know, you just, depending on the hard money lender, they might ask for proof of ownership of who's in the entity. Some may or may not want you to put it in the land trust. Some may like that more than others. So if you're talking with the hard money lender, it's kind of understanding if you don't have an entity, maybe their opinion. And of course you want to check tax implications of what you're setting up. But a lot of it's LLCs, possibly land trusts and stuff like that. You know, they want you to be protected, but also they want to be able to come after you if you default on the hard money loan. But I think most, and obviously no hard money lender is going to lend on an owner occupied unit either. It's all absentee owner. Raven asked, any advice on assessing rehab costs when looking for deals? So there's softwares out there, you know, insurance adjusters, as an example, pay for softwares that basically they can punch in one window and it uses like a statewide There's companies that do like a statewide average of different price per cost for different materials. There was I think it's Roddy was going to come a couple months ago and do like a construction rehab class on how to work with contractors and understand that dynamic. Oftentimes what works is just going through a property. If you know an agent, as an example, what I used to do when I was first getting started was I would go in vacant short sales and vacant REOs and just walk the property and say, you know, I think it needs some windows, maybe a paint, and there's 800 square feet, maybe some new flooring, some ceiling fans. And I would just go on Home Depot or, you know, something to start and find out what that stuff costs. And then as you do that more routinely, you kind of get an idea. And then if you have a GC friend or a contractor or something, you could always send them a photo like, hey, you know, if I wanted to replace the cabinets and the granite in here, about roughly where would I be? You know, what's the price per square foot for granite or whatever. So a lot of it's just using your online resources. It just takes time to kind of get an idea. If you buy a book, The Flipping Blueprint, I'll put it in the chat. Flipping Blueprint by, what's his name? I don't know. He came to TBRO before and spoke. If you have questions, it's The Flipping Blueprint. I think it's on Amazon. Luke Weber. Yeah, thanks, Mike Rodriguez. Luke Weber. Phenomenal. Most wholesalers and stuff, like if you just told me a deal over the phone, you know, square foot, bed, bath, and maybe some of the condition inside, there's usually a price per square foot, whether you're going to turn it into a flip, into a rental, if it's down to the studs or just needs some light stuff. There's going to be some rough price per square foot that you'll be able to use to get close enough to make an educated decision. So even if you're going to, you know, a wholesaler is pitching you something, you can have a quick idea of maybe how far they are off on the rehab. I can tell you, I don't think I've ever seen a rehab under 15 or 20K, no matter how much it didn't need. It's very rare. And if it was something like that, it would most likely, where we've seen some of those really low costs has been like a condo or a townhome that's 80 grand, 100 grand, just a real quick flip. You might put 10 into it and rip it back on the market in 3 weeks type thing. But it's super rare to have that on, you know, anything like a single family or something like that. But Luke Weber's book is really good about kind of educating you on the different price per square foots. And, you know, if it's down to the studs, then maybe it's, you know, 45 a square foot, or if it's just a rental, maybe it's $15 to $20 a square foot. So it kind of just depends, but it's a good book. That's where we've gotten some of that. And you may have to pay for some courses, whether it's a seminar or a guru. Greg usually does some flipping course. I think he's doing it trying to put it online, but, and then YouTube, you know, YouTube's a great resource. Just look, or Bigger Pockets, the podcasts, look for podcasts that are maybe on, you know, real estate construction costs podcasts or something, and just search on Google for some episodes about something too. And YouTube is a great resource just for following different investors or wholesalers or people talking about what stuff costs, or doing walkthroughs on properties. There's just kind of a variation of things. You may have a GC come out and give you a couple quotes, but if you don't buy anything, they're probably not going to want to do that for long. But you might be able to get a couple done that way, give you some scopes of work, and even having a fellow investor come out, you know, maybe pay them for their time, or, you know, honestly, you can get a really good close. If someone knows what they're doing, if you can get a bunch of photos, take like 50 photos of a property and do a walkthrough with a video, we can get within 5 to 10% of what it's going to cost, most likely. Now, you know, assume if you open up the walls and stuff, you might want to add 10% on top of your final budget just as a cushion, because you're always going to find something. But, you know, you can pretty much get a good idea if someone's experienced. Like if you've got Mike's info here and said, hey, Mike, you know, here's a video, you know, what do you kind of think? And you're a wholesaler, you know, you're also talking to your end buyer possibly. And you know, that's a good way. So maybe you do that. You say, hey, I'm going to send you some stuff. Might be potential deals if you'll buy them. A good way to collaborate. But yeah, a lot of it's just utilizing your sphere of influence. Yeah, Mike Rodriguez put his email in the chat, rehabber and stuff. So you guys are more than welcome to use the chat to exchange info if you're looking for stuff. Greg is ramping up flips too. So you can send some stuff to us, and every investor has different things they're looking for. You know, some might do the higher end rehabs over 100K. Some doing new construction. Some people, you know, don't want to spend more than 20K, so they're limited to a certain property or location as well. So different investors are looking for different things, and and timing too. Some investor might be looking for the exact deal that you have, but if they have too many projects going on, they can't purchase it. You have to find someone else too. But yeah, good stuff. Okay, cool. What other questions we got? It's 8:20. I'm happy to stay on here until 9 if you guys need. Any other questions that are kind of going on? Let me look at my notes here. I mean, I think that's mostly what I got.
Hey, Jeremy, I got a question. Have you seen some realtors struggling more than others, like coming out of this? Like, have you seen realtors leave the business, or more are coming in? Because like I thought, if the market dipped a little bit or slowed down, it could reduce the amount of realtors out there.
Yeah, we haven't seen anything in our brokerage, but I think that you do have. Yeah, I'm sure there are people hurting just because lack of people wanting to do anything. Go look at properties at people's houses, or sellers not wanting to show anything, or just sellers not wanting to sell yet. But I think it's not going to be like long enough to really have like a long-term effect. But I think if it was to happen for another 6 months longer, I think there definitely would be a dip in that amount. Mm-hmm. For sure.
Yeah. Mm-hmm.
Yep.
I got an update on the lending side. Fannie Mae and Freddie Mac came out with some tightening or additional documents that lenders are going to have to get for someone that's self-employed. So it's going to be, it was challenging before. It's going to be even more challenging now if you're self-employed to get conventional financing. They really want to see how you are doing through this, pandemic, and how your business is it going to be operating at the same levels as it was the past 2 years. So they're now, before they didn't ask for audited profit and loss statements for the current year income. Like you could just write it up yourself and sign it and date it. That now they're having to have an accountant write that up and have an audited P&L as part of the qualification. So, and that goes for anyone that's an LLC, Schedule C, just an individual on a 1099. So yeah, just be prepared for that if you're self-employed.
Good notes. Yeah, a lot of people don't think that when they get into the industry, like, let me quit my job. And then
You're self-employed now, and
screwed.
You need at least, a 2-year history of doing the same thing. Yeah. And if you write a lot of things off, the first year and a half or 2 years, and then you're doing well that 3rd year, and then you want to go buy a house because you're making great money.
Yeah. You
can't really do it because nothing on paper from the last 2 years shows that you made money. So got to keep that in mind as an investor, as a realtor.
And it's like the basic business building blocks, right? This book, Profit First, is probably one of the best books that was just like the light bulb went off for me. And because as entrepreneurs, you start a business, you're growing it, but as your revenue grows, typically your expenses do as well. So it's just a simple mindset shift in how you're allocating and basically leaving your expenses last. You pay those last type thing. So it's been really helpful for me. But yeah, this year, I had to write a little chunk of money to the IRS. I used Frank to do my taxes, and yeah, it's one of those things where I know I want to replace the wife's income. She's a good W-2 earner, so we're thinking, okay, 2 years ahead of time. I don't want to write too much off now, but something that's fair. But I want to be able to make sure we qualify more and more as the years go on. So you do have to be strategic about it and think, especially when you're buying rentals, thinking 2 to 3 years down the road on where you're going to be or how the situation might change. So we're anticipating before she quits her job later in the year, possibly, that we would buy a second property. We would probably move into just to get a little bit more space before she would quit, to make sure we can definitely qualify for something bigger. And before.
Yeah, I mean, if anyone ever is thinking about buying in the next year or two and are in the dark about where their tax returns are at and wants me to take a quick look at them, I would be happy to. It's better to get advice early on so you have time to shift and change around how your structure before you actually really are wanting to buy. So
yeah, when I bought my place, I went ahead and I reached out to the lender and was like, what could I qualify for if I wanted to buy another property? And I was actually surprised at the amount that we could have bought maybe a second property if we wanted to at the time, but I just didn't know. I would have never thought I would have been able to. So yeah, it's a good thing that's why they teach credit and stuff is so important. You never get taught that. But what other questions we got, guys? We can really pivot into any topic. Like, I've wholesaled, run a brokerage, 25 agents. I manage about 115 doors right now. Might even hit 200 by the end of the year. Stuff's just been blowing up. So if you management questions, if you're a landlord, how are we charging? How do you maximize? If you're self-managing, pay for your time on tenants. Happy to give away any nuggets on what we have going on. It's just crickets, man. Nobody wants to.
I got nothing. I mean, I could keep talking if you guys want.
I know. I'm just like, people got to be bored just listening to like, what is this? It's like a happy hour. We're just joking. Well, I mean, if nobody has any questions, I'm gonna stick around and hang out. But I don't have a bunch of content to go through. So if you guys don't have any questions,
Hey, Jeremy, any talks about when we might be getting back together as a group?
I think July. I think Greg's gonna. I think I talked to him today that July the subgroup meetings should start up again next month. Not the main meeting, probably just because it's over 50. I think that's what the rule is. But
oh, okay.
Yeah, for right now, I'll probably still do virtual.
Yeah.
I think the wife's doing like a week or two. So Mike Rodriguez said, Rob, what are you seeing with final approvals for appraisal? Are a lot starting to do more downward adjustments? I think Mike came in after the situation earlier.
The VA appraisal. Well, he was the one that asked that.
No, it was Ryan Whitfield, I think, asked.
Oh, yeah. Sorry. I guess I don't understand the question. So are you starting downward adjustments?
I think it means appraisers being more conservative or decreasing maybe what they're seeing with comps to adjust for the market.
I have probably like 20 deals going right now, between purchases and refinances, and maybe 2 to 3 came in light. The others came in right at purchase price or where we needed it. So I don't know. I sense that the appraisers are a little scared to push. It's an opinion of value. So there are certain ranges they can operate in within the comp. So maybe they're skewing to the lower side of that bell curve, just because of all the stuff that's going on. I sense that they are doing that.
Mike, can you clarify what you mean by final approval? You said the appraisal comes in good, but the final approval comes in lower. I'm not sure what that means.
So you're saying it goes to underwriting and then the lender adjusts it down, is what I think you're saying. That could happen.
Oh,
There's things that each lender has where they run it after they even get their appraisal. They run it through like a core logic system or something that
AI.
basically, yeah, it's AI that like tests the appraiser's comps.
Okay.
And if it's way out of whack, it kind of will prove, it'll say that like this is a red flag. And then a lot of lenders or an underwriter will require what's called a desk review. It automatically triggers some red flag. So a desk review is another appraiser just looking at, not going out to the property, but looking at the comps and kind of doing his opinion of the value.
Interesting.
And then that's almost like a second appraisal. And then if that comes in, lower, then they might have to use the desk review amount.
Gotcha. Do you guys have, maybe it's automated on the back end, like, I don't know how you guys do it with Guild Mortgage, but if you guys put something in and something's way out of way, and maybe it'll red flag it, like, hey, look into this. That's probably what these companies are using.
That's what it is. The underwriters have this thing through, I think, CoreLogic or something that has access to MLS, and it's an AI, artificial intelligence, that does the appraiser job for them. And if it's below or above a certain boundary, that might trigger something with the lender. So
Yeah, I've never run into that.
let's see, are those
It makes sense that
being
people
done
are
more
probably doing that a little bit
frequently
more now
appraisals and what
than maybe they
percentage?
were before. But
So I think this is a secondary question. Am I seeing a more automated appraisals and drive-by appraisals due to the pandemic? Some appraisers didn't have access to properties, like sellers didn't want them to go in. So Fannie Mae and Freddie Mac, the government agencies, allowed, if that situation happened, they allowed for them just to do like a drive-by appraisal temporarily. Or they are starting, I'm seeing more appraisal waivers that are allowed. And how that's determined, if your property is eligible for an appraisal waiver, it's complicated, but it's really all done through the automated underwriting engine from Fannie Mae and Freddie Mac. So we have to run every loan scenario through that for them to buy the loan. They provide a lot of findings, and I don't know the formula, but if it's like a lower LTV and the buyer's got high credit, good assets, it might shoot back like a appraisal waiver. So there is no formula for that though. Mike, hopefully that answers your question about like desk reviews or drive-by appraisals or audit, no appraisals, in fact. The mortgage market's changing a lot. I think what happened is kind of causing an old school business to shift a lot of things that they do, or making it happen more quickly. Things that they were trying to get in place that just kept dragging along. I think that's going to be a good thing for lending.
yeah, we were talking
to
to old Tampa Bay Title, who's mostly who we close with, and they're one of the TBRIA sponsors. And I think it was one of the software companies that does the e-notary stuff, like got like 1,000 inquiries in like a 2 or 3 day period, because all the people across the US were like, I know Zoom was like behind the 8 ball. But I think it's, there's been a lot of bad things obviously, but I think it's been a lot of good things that have come from it from, like my wife's an architect and, her firm. I think employees are just as productive when they're virtual. I think one thing is that when people are bored at home, they just work. So yeah, maybe they take a nap during the middle of the day, but they're working later. Maybe they're touching stuff on the weekends, and the virtual thing. Our business is pretty much 100% virtual, anyways. But I think it's been a good thing. It maybe opens some eyes on the commercial side of things too. People not needing this much office space or being able to operate, or at least maybe alternate days of people coming into work. So I think it's pushed some industries forward a lot faster, which I think is good because usually it's surrounding technology.
Yeah, we're rolling out e-closings, and it forced a lot of lenders to roll that out faster than they wanted to. But that's where you're going to be able to sign a majority of your documents electronically before the day of closing.
Okay.
And you only have to go there and sign like the mortgage and the note and the things that get like recorded with the county.
Yeah.
And I think eventually it might be all virtual, a closing. So you never have to go in, which is awesome.
Yeah. Which I think, it seems like it makes total sense to me to move in that direction.
So there's a question here. To get an appraisal waiver, is there a minimum criteria you're seeing that buyers have to have? Example, 700 plus credit score. There's no guidance from Fannie Mae or Freddie Mac or FHA, VA that says what the minimum credit score is. I haven't had a ton of them. I would say that a higher credit score would definitely help. And I think maybe more in assets, or what we call reserves, would help the formula. That automated underwriting engine looks at everything like that. Credit scores, reserves, debt to income ratios. So I think that's what determines it.
Yeah,
and maybe there's some other formula too that Fannie has on the back end, or where they have foreclosure data and data about the market that we don't even know about, where they're determining that from their own artificial intelligence, right? It might not just be the buyer, it might be the area too.
Yeah, that's a good point. I know, just to pivot a little bit, when we've been, a lot of the hard money lenders that we've either been talking to or we've been getting leads from other people, deals falling out. A lot of the hard money guys are shortening their terms, are asking for a lot more down than usual. Maybe not financing the rehab portion as well. So if you guys are looking for hard money, you want to keep a couple extra in your back pocket, understanding what their terms are. Will they finance the construction costs? If they do they require you to have actually all the construction costs set aside in your bank account already, but it's more of like a draw system? Like, how are they operating? So are you seeing any of the do you offer like one or two like in 30-year products, right, Rob, for investors?
Hard money.
Yeah, or some type of like
Just like
no doc stuff or whatever.
I did.
Yeah.
I had
Nothing's
at least 5 or 6 companies, and then they all, suspended lending. Their investors dried up, and I have seen them slowly start to come back in and open up. I don't think we've opened back up yet, but I'm interested to know what kind of terms they have now and how that differs from 3 months ago.
Yeah. And if you have money,
go ahead.
I was just saying, if you have money to lend, like you're a private lender, now's the time where you can charge a premium, and you can be super picky about who you want to lend to.
Yeah.
I see some people post some stuff like, unless they're getting it for the lenders, just coming in with a sweet deal. Most of them are going to be higher on probably everything, points, interest, how much they want down. They may even
I
look
can't
at credit
imagine
a little bit more.
we're going to be seeing the 6 and 7% rates that were there 4 months ago on the hard money stuff for me with no docs. Those definitely, the investors, to take the risk, they're going to want more in return.
Mm-hmm. Yeah, so I think it's going to be at least another quarter till we really see any of the secondary market stuff even remotely come back.
Jumbo, same thing. That dried up and they're slowly starting to come back, but it's very conservative. And the rates are not as good as conventional. And the reason conventional has stayed pretty low is because that the government is providing liquidity to allow for those low rates to happen. Okay, because the lenders know that they can always sell those type loans to the government. They'll buy them, because that keeps rates down. But when you look at the hard money investors, and then when you look at the jumbo loans, those are non-conventional loans. So there's less buyers out there for the loans.
Mm-hmm. Yeah, that's a good point. All right, guys, we got like 20 minutes left, or we can end early. So anybody got any parting thoughts? Any questions?
When's your wife due, man?
Well, it's supposed to be the 11th, but she's going to be, I'm sure it's going to be another week.
June?
Yeah, 2 days.
Wow, man, any day.
But yeah, it'll probably be like another week or so.
Man.
That's our first.
You got the bags ready to go, man? You got your plan?
If I didn't
have
your
exit plan?
My flag, if I didn't have my flag on, I'd show you. I got a suitcase on the ground, some stuff in it.
Well, that's awesome, man.
Yeah.
Good stuff.
So hopefully I'll still be around on some of these South Tampa meetings in the next couple of months.
If you ever need me or Jared to help out, let me know.
Yeah, for sure.
Hey, man, the first couple of months are super easy. Just wait till they start crawling and walking, then climbing, then
being human,
doing everything else. Dude, this is the best time of your life. Embrace it.
Yeah, I've been having like a killer morning routine. Even being in the military, a lot of people think your morning routine automatically crushes it. But one book that I recommend to you guys, just on the sidebar, is the 5 a.m. Club. Man, I don't know what it was, but something in that book just clicked for me. And
like it.
Yeah, even on the weekends, man, I get up 5, 6 a.m., work on the business, work on some stuff.
Hey, you're going to have to shift that. It's going to have to be in the evening time, because
it's like great.
Just from personal experience, man, they get up at 5 a.m.
I know. Yeah. I'm like, I get a good 30-day head start with this great routine, and then it's going to be thrown in a tornado.
It'll be the best tornado you've ever been through, I promise.
Yeah. Let's see. You see, Rob, Mike's got another question here. I think, I heard that some of the lenders were like were kind of getting squished because when the government buys the loans, there's like is there less spread for the lender to make? I forget. I saw an article about something that made it sound like lenders were
not less spread. I would say that if you're not a direct seller or you don't service loans to the agencies, they kind of made it harder to sell to them.
Okay. So like someone using Quicken on the back end, or Rocket Mortgage
Yeah.
or something. Maybe they're
So I think they service, but there's some brokers that go through a wholesale channel and then they sell it to the investor. Well, I think those are the ones that restricted credit scores on FHA and VA. And unless you service those types of loans, then you didn't have access to doing credit scores of 600. So I think that, my company's set up great. It's been awesome. We've been very competitive. We've had all the programs available, no restrictions. So yeah, it's been good. So Mike's asking, what if they stop or reduce? And my answer to that is the Fed has pledged and very strongly to keep buying for as long as it takes to keep the economy going. They will not stop buying. Now, at what levels? I was reading that the Fed's supposed to announce something tomorrow or just have a regular press conference, and they may talk about the levels at which they're buying. So if they are going to reduce the amount that they're buying, that's going to increase interest rates. If they say that they're going to continue at the same levels or do more, I think that you'll see the interest rates drop for mortgages. If they totally say they're going to stop, I mean, that would be very bad for the mortgage rates, Mike. So we want them to keep buying for as long as possible, as much as they can.
What are some of the rates you're seeing right now? Just, rough.
Yeah. I mean, regular 30-year fixed, top credit purchase, you're probably 3.125 on a 30-year fixed, just insane. I mean, that's some of the lowest I've ever seen.
I think Mike really wants to know if you have if you can see into the future, Rob. Rob's got the crystal ball, guys.
If I knew, man,
Mike had these questions.
Yeah, I'm definitely not an economist. I try to read, as much as I can about the topic of mortgage rates. But I would say, Mike, that they look at economic data and, job reports are a big report that they look at. I follow the 10-year treasury note, and that's just kind of the sites I look at. Buyers dry up with the lending. I can't sell my product. I'm not sure what you mean by that, but yeah, the government is key in keeping the liquidity going, keeping the housing market going. So they've done a good job so far. They acted very quickly, to, I guess, prop up or keep things going as soon as they found out about the pandemic or COVID. I guess last recession, they were more delayed in the assistance. So that's why it was more of a longer period of recession. I think this one's said to be, much shorter because of how the government acted. So, and again, I'm not an economist. I don't know everything about it. I just try to, keep up around the topic of mortgage rates.
Yeah, you may just be more conservative on the ARV and stuff. If you're going to be flipping, you might have to just chop off a little bit and to liquidate it quicker. I mean, we've always just, if Greg's bought something, we've always mostly done under 150 purchase price, under 75 on the rehab. You just kind of stay on that sub 300 ARV market. I think it just makes sense.
That's never died off. Yeah.
Right now he's looking for like tons of condos and townhouses, which those are some really fast flips. I don't think a lot of investors are looking for them. But man, he's, some of the best ROI on a percentage basis has been on those little flips. So you buy it for 80, put 10 into it, you flip it for, 120, just something quick in and out, could be some good stuff. So I just think, you just be conservative. You maybe extend the time of the rehab or length of time on the market, prepare for 9 months as opposed to 6 or less or something.
And Mike has a tough question tonight. Let me see if I can find you an article, Mike. I'll post it in the chat if you really want some boring ass reading. I'll find something.
Yeah, you do have the high HOA fees with the condos and stuff for sure. Yeah, your holding costs can kill you on the condos, and Also understanding if the condo restricts, I've had condos where you have to live in it for 12 months before you can rent it out. Or do you just have to own it that long before you can rent it out? So just sit vacant. But yeah, townhouses and condos can be dicey, but I have clients buying them for rentals too, but it's just not as much as a single family. But yeah, if you guys have deals you want to sell, make sure you get one of our contact info. Always looking for stuff, but I'll kind of officially let you guys go. If you guys don't have any more questions or anything, want to hang around, put my contact info there. You guys can reach out, and we'll just connect. I forget what topic we're doing next month. So it might be in person, or I guess Greg will make an announcement. So you can always catch one of us offline for more stuff. But all right, y'all.
Thanks, Jerry.
If you need the recording of this for some reason, just let me know. I'll get it to you guys. All right,
All right, man.
see you.
Have a good night. Bye.